Making history for my people like it's February. It's on time, feeling legendary. Making history for my people like it's February. It's on time, feeling legendary. Making history for my people like it's February. It's on time, feeling legendary. Making history for my people like it's February.
Thank you so much. A very good afternoon on my end. So very good day to everyone who is part of the conversations today. My name is Alakanani Itireleng, based here in Gaborone, Botswana. Thank you. It's an honor, I think, to host all of you today as we discuss regulation and tax compliance. I'm very glad because I know on our panel we've got a lot of people who are like well versed on this discussion, and I do believe our discussion will be flawless and we'll be able to like come up with very strong points and very strong reasons why and reasons why not regulate tax and all that. Yes, before we start, I will kick off first by making an intro. You let us know who you are, what you are doing, and all that, in relation to the topic that we're handling today. Yes, we can kickstart. Thank you so much. Maybe start with you, Maureen, because you're the one that I know.
Sure. Hello, everyone. My name is Maureen Murat. I'm an attorney based in DC, and I have a business called Crowdy Advisors. And so my focus really started in crowdfunding, right, and finding ways to fund businesses. And I think crowdfunding and cryptos and the Web3 kind of just mesh together in order to support small businesses who haven't necessarily had the options that we have now with Web3 and cryptos.
Thank you so much, Maureen. Yeah, we can all, I'm not gonna call names. I won't call Maureen because I know her. So you can all, anybody who is ready to like make an intro, please go ahead.
How you guys doing? My name is Charles J. Kelly, also known as CJ the Smart Guy. I'm a certified public accountant. Sorry, I just been running about. I had another call this morning. But I focus mostly on cryptocurrency taxes, bookkeeping, as well as consulting. I think that with the evolution of cryptocurrency, the accounting field is about to change a lot, especially like CBDCs. And so my goal is to make sure I fuse the accounting and the cryptocurrency industries.
All right. Thank you, CJ, the Smart Guy. Thank you so much.
Hard to follow someone who has the smart guy in his title. But, my name is Joanne Holmes of Holmes at Law. I am a global intellectual property attorney. I manage IP in 140 countries. And I help clients in Web3 design engaging offers, provide a little peace of mind at launch, and help accelerate revenue when they're scaling. I personally love to help my clients understand how to make money from their creativity and innovation, and I'm looking forward to having a fun conversation with everyone.
Thank you, Joanne.
All right. Well, I'll go next. So my name's Troy Foster. I'm a partner at the law firm Perkins Coie, and it's a international law firm. It represents companies in the Fortune 50 as well as kind of startups. My work focuses on the emerging company space. So I'm the co-chair of our emerging companies and venture capital group, and in that context, run across a lot of crypto and Web3. It's a big part of what our firm focuses on, so. Let's see, for the last probably 6 years, this has been anywhere from 20 to 40% of my practice. So looking forward to the conversation.
Thank you so much, Troy. Okay. Has everyone done the intro? Okay, thank you so much, everyone. Thank you, Troy, Foster. Thank you, CJ, the smart guy, Joanne, and Maureen. Thank you for joining the conversations. Like we said in the beginning, today we are looking at regulations and tax compliance. I think the issue of tax has been like a thorn in the flesh even way before we're talking about Web3 and NFTs and metaverse and everything. So today we are looking at regulatory and tax compliance in Web3. We know Web3 is trying to decentralize things, having new ways of running businesses, maybe running businesses on smart contracts, etc., etc. So maybe the first thing that I will want us to look at is the state of the affairs now. How is the tax regulations and the tax compliance as far as cryptocurrency is concerned? How is the field? How is it like in the world, like generally, not only looking at the United States? How is the state of the affairs now? Maybe just looking at crypto, just crypto, before now moving on to Web3. How is it? How does it stand as of now?
Well, I can jump in from a just from the narrow U.S. securities law sort of perspective. I think what we're seeing now is sort of a continuation of the story that started with the new administration. So it was, there was a lot of optimism around Gary Gensler and the new, kind of SEC head, and the thought was that, having somebody there that really understood crypto would create a little bit more of a relaxed enforcement environment, and kind of give us, give the industry, frankly, a little room to grow without, kind of smothering regulations. And unfortunately, that the optimism surrounding his appointment was unfounded. He's been extremely hawkish in his approach, and that trend has continued. There's a little bit of a jurisdictional spat between the SEC and the CFTC about whether these crypto would be regulated as a security or a commodity. I think the industry would much prefer commodity regulation, frankly, because it's a little bit more predictable. But the SEC has been extremely aggressive in this regard, and the most recent sort of cases. I mean, there's the Ripple case, right, which was a big surprise to folks in the industry that they would, go after an offering that was that old, just in sort of time. And then there was a more recent case where the SEC went after a couple of employees of Coinbase for insider trading of tokens that were on the that Coinbase lists, and that was a pretty aggressive stance for them to take in a case, but it's very consistent with what Gensler has been saying about his view that all of the majority of the tokens that he sees in the trading market are securities. So that's kind of, from my perspective, again, my narrow window from the US of what we're seeing in terms of the regulatory landscape.
Thank you so much, Troy.
I would just add to what Troy shared that Web3 is innately global. And so to the point of looking at this industry from a perspective that, of course, American law is designed to have a long arm reach outside of the United States. So to the extent that US citizens are involved, or have access to be able to own assets, US law is going to have impact, just like, for example, EU law is likewise designed to have long arm impact. What the challenges between, for example, the SEC and CFTC are having is the effect of that is that it's very difficult to advise clients at this time here in the States, because we know that the regulation is in evolution. We also know that litigation is happening, and so judges and juries are creating law in real time. So what that does with a mindset towards Web3 being broader than the United States is, for those who do have more friendly regulatory regimes, there are opportunities. And this technology and innovation is not going to pause while the United States at the federal and frankly at the state levels consider how cryptocurrency should be regulated. So to those outside the US, we would invite you to really think about the ways that you and your citizenry can be served through Web3 innovation, and think about ways that you can balance out protecting your citizenry together with the economic opportunity that blockchain technology would offer.
Well said, Joanne. Thank you so much.
And I'll let CJ talk about the tax, because I think that was your question initially, right? Like the tax compliance issues. But I've been following the IRS for several years now, because I want to say in 20, maybe 14 or 15, they put out an initial bulletin talking about cryptos are going to be considered as property, and if you use it as income, it would be taxed as income. But then they hadn't really created a structure to figure out, like, well, if we're going to do it based on capital gains or loss, then what was the fair market value, what did you lose, etc. But I think over the years they found a way to kind of create some structure around it, even though some of their bulletins or notices garner more questions than answers, but there's that. But I do know that, I think, was it this year, CJ, or last year? Maybe it's this year's tax return. They've actually put a question on your 1040 now to say that you have to be able to tell them, whether or not you've purchased, exchanged, etc., cryptocurrency in the last year. So I think in terms of on the tax side, it's really becoming more involved. And I want to say, in terms of spat of jurisdiction, to just touch on what Troy mentioned earlier, even the FTC now is engaging in conversations about cryptocurrency. So I think, to your point, Joanne, the US, the federal government agencies are reaching wherever they can.
Yeah. Okay. Okay. Go ahead. Somebody wants to talk. Yeah.
Yeah, to follow up what she was saying, around 2013, they came out with the bulletin basically saying that cryptocurrency is treated as property. But before, like, I would say between 2013 to 2017, most people using like-kind exchange as a way to legally avoid taxes. But as of the Tax Cuts and Jobs Act after 2017, like-kind exchange stopped being used. And so that's why every single sell, exchange, or spend of cryptocurrency creates a capital event that has to be reported on the 8949. And so when it comes to the IRS and DeFi or trading, they don't really get along, because you have to report every single one of those transactions. And so most of the time, like for instance with equities, the exchanges will provide 1099-Bs, but in this crypto space, it's very difficult to determine what your cost basis is. And so you're having a whole lot of regulation and thought leaders coming together to figure out, well, how can we tax this cryptocurrency accurately? And so unfortunately, a lot of people are going to be receiving 1099-Bs, and it's going to be saying that they owe a whole lot more taxes than they actually do. And so people have to manually put their cost basis and keep track of all of that, as well as to follow up on what Maureen was saying, is that in 2019, they added that question in your tax return, but it was on Schedule 1. Most people don't file Schedule 1, I'll say about 50%. And then in 2020, they added that same question on the first page. 2021, they changed a little bit, and now in 2022, they're changing it again. But if you don't check that box as yes, and you're in this crypto space, that's an easy way for them to catch you for fraud, because they're trying to come after people in this crypto space pretty heavily.
Wow. Joanne was talking about the regulation still like evolving, and some kind of there's still some kind of trying to understand, how to maybe to regulate, or maybe how to make people to be tax compliance. Do we see that not as a challenge, especially maybe to people who are doing crypto, because one moment you don't know what really you are being taxed for, or how you should be submitting your taxes as what. So do we see that as kind of a confusion in the space, not only for the people, but also that not causing like some kind of confusion at the end of the day?
Oh, there's plenty of confusion. There's confusion from the IRS, there's confusion from the taxpayers, there's confusion all the way around. I know that they're trying to do more additional tax enforcement. They just added a bunch of money, and they had different leaders who are going to be looking over digital assets. But the biggest thing is, how much are we supposed to be paying with NFTs? Is it considered collectible? Is it considered property? So there's lots of gray areas. It's confusion all the way around. I just tell my clients to do their best and take fraud off the table.
One thing that I would add, especially because many of those who are listening in to the summit are going to be entrepreneurs, to the extent that you are a business owner, and just to make it as simple as possible, let's say, for example, you are a solo business, you're the only employee in your business. You might consider setting up a solo 401k, or you might have an IRA. And you can use either a Roth or a traditional IRA, or a Roth or a traditional solo 401k, and use that retirement vehicle as a way that you can buy digital assets, including cryptocurrencies. And then you're not dealing with the year in, year out questions around cost basis and reconciling it every transaction. It makes it possible, especially if you are thinking towards the value of digital assets over the longer term, to both be able to take advantage of opportunities in the market, whether the market is down and you want to be able to take advantage of sales or acquisitions in a way that you're not going to have to deal with an immediate tax implication of that. So I would highly encourage people to speak to your tax attorney or your CPA and think about ways that you can reduce some of the yearly tax challenges of reconciliation through doing your investments through retirement vehicles.
Yeah, just one that I agree with all of that. I think that's good advice. Just what we see on our side is businesses that are that use kind of their crypto as a additional means of employee compensation, right? So in addition to your salary, in addition to your annual bonus, you get a token allocation, right, or something like that, right? And there's challenges with doing that. Again, how do you tax that? And I think that generally our advice is quite similar to CJ's, right? Which is just make sure that you're reporting it in some way, right? And so you can arm wrestle on an audit with how you've done it, but at least it's not they can't get you for the failure to disclose it, right? And so I think that's good advice as well. I think from a macro perspective, generally speaking, we're of the view that kind of getting a tax regime in place that makes sense and is predictable is actually probably a positive for the industry, right? Kind of makes it more have it exist in the sunlight, and have government jurisdictions start to enjoy that tax revenue. Makes it less, makes crazy things like bans and stuff like that less likely.
I was going to add that one of the things that I think causes confusion for some of these regulatory agencies is that it's also moving, Web3 and all that is moving beyond just finance, right? So it was just finance. It was easy for the regulators to kind of figure out, okay, well, if they're making money off of this, IRS is like, okay, well, it's income, it has to be taxed. Or if the money's moving from here to here, then maybe some of the banking or money transmission laws are saying, okay, well, we have to know, we have to close the loop. How did it get from this person to this person who's an intermediary, et cetera? But when you're including art and culture and, other aspects that, create value as well, I think it throws, the antiquated way of thinking of things or seeing of things, it just throws them off. And I mean, to be fair, if we think about like how the internet just plays now, it's very centralized, right? So that's something else that I think I guess regulators almost just kind of got used to, right? You're just now seeing that they're bringing, the giants to come to these different hearings and all that. And let's say the last 5 to 7 years. But the Telecommunications Act didn't come until the 90s. Was it mid 90s, 96, 97? Long after, AOL and all that was out. So I think, and I guess we say this a lot, regulators tend to be behind the curve, right? Behind innovation, always trying to find a way to catch up. But at the same time, I think it's important that regulators also be flexible about where they get their sources of information. I've been to different hearings, like, or just watched hearings nowadays because you can't go in person, but you can go to these different roundtables and all that and listen, and they tend to have the same people that go to these things and say the same things. And they're all, in an echo chamber in a sense. And so I think if regulators could find a way to just be like, okay, well, we need to actually speak to people in the industry outside of these three people who look like us. And that might help them, have less confusion, and then maybe not pass on the confusion to the participants in the ecosystem. So I'll leave it at that.
Okay. Yes. Maureen, you just stated that the regulators are always like kind of right behind the innovation. Like innovation is always like far much ahead of the regulators. And when you look at Web 3.0, everything is decentralized. So it's challenging everything that is happening. It challenges what constitutes maybe a commercial transaction, what constitutes a firm, a security, etc., etc. So as an individual, maybe what kind of advice would you give to the regulators maybe who are listening to us today, to try and make them, understand where the whole internet or whatever is going, or the way things are going now? What kind of advice would you give to the regulator?
I would follow Maureen's point and say we really need to affirmatively go out and seek voices who don't sound like the same voices who sometimes are being heard by our legislators here in the United States, because the impacts for someone who is sending remittances back to their family overseas of Web3 and blockchain technology are going to be different from a multinational corporation CEO who is thinking about supply chain, and the blockchain tech implications are going to be different than the implications of a small business who's thinking, how do I build out customer loyalty, maybe through issuing utility-focused NFTs? But you need to talk to people across business and across life experiences to be able to do that. And the reality is, again, because this technology is global, if the United States doesn't have a pragmatic regulatory regime to allow this innovation to be able to evolve, then it's going to go overseas. And that's lost economic opportunity. So I would encourage regulators to listen to a more diverse slate of those who are going to be impacted by blockchain tech.
Thank you so much, Joanne.
Yeah, I guess I would agree with that. My sort of general advice would be like, there are plenty of sort of folks out there with bad intentions, right? That are not, really, kind of there's no economic substance to their business. Like could you spend time going after those folks, right? And the people that, are kind of, Ripple and Library, and those are real businesses, right? Like there's economic substance to those businesses. Like I would make those, if you're going to prioritize who you're going to go after, right? Like I'd make those guys last, right? If you've got like some issue with them on the regulatory side, like, versus the vaporware people that, there's sort of nothing really to their business, like that's where I'd love to see, kind of the regulators point their various weapons.
Thank you, Troy. That was quite interesting. Yeah. All right.
From an IRS perspective, there's two things I wish the regulators would do. One, I wish they would really look at cash, because cash on the balance sheet is considered an asset, but due to inflation, it goes down in value over years. So cash is actually a liability. If I have any advice, I would just start denominating everything into Bitcoin, because there's only 21 million Bitcoins to ever be created. We know the inflation rate, and to me, that's the true asset. And then, if they're saying, oh, that's too much, then I think we should really look at international way of accounting. Michael Saylor with MicroStrategies, they try to use like the international method, where if the price of Bitcoin goes up, we take that as a gain. If it goes down, we take that loss. But currently in the US, we use GAAP. And so when it goes up, we don't take the gain. When it goes down, we have to take the loss. And so a lot of CEOs aren't purchasing Bitcoin and cryptocurrencies because there's no benefit to them, because if it goes up, they don't get an extra bonus because they can't take the gain. But if it goes down, they have to take the loss, and that's how they get fired. So it's just too much risk for them to, invest in their Bitcoin and cryptocurrencies. And so I would say either change that rule or just change everything into a Bitcoin standard.
Bitcoin standard. Thank you so much, CJ, smart guy. I like that. Yeah. Thank you so much. It has been like a great conversation, and I'm just hoping that people who are listening, both the people who are using our Web 3.0 and also the regulators, they will somehow come to an agreement of some sort. The regulator will regulate nicely in such a way that it doesn't suffocate innovation, and those who are using Web 3.0 will remember, like CJ said, to always write down and file their checks as well, so that they don't get into any trouble for fraud. Thank you so much. I think there's still so much to discuss, but because of time, we'll have to cut our discussion short. And thank you so much. And we're hoping to take these conversations further beyond, the virtual conference. Thank you so much, people.
All right, great job moderating the panel.
Thank you.
Okay, perfect. Awesome, and thank you so much for coming here. We got an amazing brother who's been doing so much in our space, and we stand on his shoulders in many ways, and the ancestors are definitely showing him favor. Our amazing brother, good brother, Brother Arthur Hayes. Welcome to the Black Blockchain Summit.
Thanks for having me.
Awesome. And just so that we can have a great conversation, we also have our co-founder extraordinaire and dynamic leader who's carried me most of the way, technically, probably a lot of ways too. Good brother John Karanja Wanaina for being a fireside chatter. Thank you so much, good brother John.
Asante sana Sinclair, and karibu sana to Arthur Hayes to the Black Blockchain Summit.
Awesome. Well, let's go ahead and get to like the background. What they say, a lot of times people don't care what you know until they know you care. One of the ways we do that is let's get that background story. That born on a farm somewhere or in an urban city somewhere. Like, I know we just want to keep it 100. Give us the best story you got. We'll put a little rap beat to it. I'm joking. I apologize for all the jokes. You're like, look, man, I'm here for a serious conversation about crypto. Brother, please take it's your stage.
Yeah, so thanks for having me, everyone. Very simply, was born in Buffalo, New York. Both my parents worked in the auto industry. Spent a bit of time in Buffalo, then moved to Detroit. Moved back to Buffalo for high school. Graduated high school, and then went off to Philadelphia to University of Pennsylvania. And been interested in business my whole life, and so I went to the undergraduate Wharton School there. I had an amazing time. The highlight of my 4 years was actually not in Philadelphia. It was in Hong Kong. I forgot why, but back when I was a senior in high school, I read a book about a bunch of traders in Japan. I think it was during the early 2000s. The fund is named Evolution, and it went through this guy and how he was trading the Japanese market as an American, and I thought, wow, this sounds awesome. I want to go somewhere new and leverage my experience and get to where I want to go faster, because the American system is the American system, and it takes how long it takes, right? So I wanted to take a shortcut. So I said, well, Japan, that was 1970s to 1989. There's got to be who's the new kid on the block, and that's China. So I decided when I was a senior in high school that I was going to learn Chinese and go move to China. So I got to.
You said in high school. John, did you hear what he said? He said in high school, he looked around. Like, come on, break that down a little bit. What made you look around like that? Come on, brother. Break that. That was he didn't say, look, I was looking at sports and I was looking at a field. No, bro, you said Japan is passe. I'm on to Hong. Come on, talk about like how did you even think? Like, come on, break it down to us. We got students all over the world. We might have high school students, so we challenge all the high schools. Like, y'all got to step up your game, brother. Art, he done showed you a path. But go ahead and tell how did that happen?
So it was this 2003, 2004 when I was senior in high school. Obviously I have a much deeper understanding of China. I haven't lived there for my whole adult life now, but very superficial level, back then as a high school student, you say, okay, well, they just admitted China into the World Trade Organization back in 2000, and you have this ascendant society, right? 1-something billion people coming from a super low base, hopefully on a higher trajectory, and they obviously have over the past 30-something years. And, if you've read enough history, you know that, okay, if I want to make my mark on the world, if I want to be super successful, I want to go somewhere where there's nothing and try to be part of the story when it grows. And so I thought, okay, there's, China's a blank slate. Why don't I go, learn this language and, see if I can go move there. So I got to the University of Pennsylvania. I was obviously in the Wharton School, and I decided to take Chinese language. So 5 days a week, I had an hour of Chinese class with a bunch of other students. So after about 2 years of that, then it was time as a junior to decide, okay, where do you want to go study abroad? And unfortunately, I wasn't fluent in Mandarin, so I couldn't go to the immersive program in Shanghai with Wharton. So I decided, okay, well, Hong Kong is English language program. They have a very good business school at Hong Kong University of Science and Technology, HKUST. And so I applied for that program, and I went. I flew off to Hong Kong in the fall of 2006. And just to plug, I don't know if this scholarship still exists right now, but I didn't have a lot of money, and so there's this thing called I think it's called the Freeman in Asia or something like that scholarship, and I think it was like $7,000 or $8,000, which is a lot of money for a college student back then. I don't know if that's still the same today with inflation. And all I had to do was write a paper. So I applied for the program, and I got the money, and obviously, I had to submit this report on my time abroad when I finished the 4 months of school there. So, I fly off to Hong Kong as a junior. I get there, and, I fell in love with the city. I traveled to China, traveled to Thailand, traveled to Singapore on my, time abroad. And I decided, okay, I want to move to Hong Kong. And so I had that previous summer, I worked at JP Morgan, another program I'll plug here for, it's called SEO, Sponsorship for Educational Opportunity. I'm sure the program still exists, but they help minority kids get into Wall Street. So they had a program for sophomores, which is usually pretty hard to get a internship as a sophomore going into your junior year because you're not actually graduating. So like, why is the bank paying you a bunch of money to get coffee when you can't actually go work for them the next year? And so it's difficult. But I was able to get into the program, had an internship at JP Morgan, had an offer to come back for the next summer. But I was like, hey, I want to move to Hong Kong. And fortunately, they weren't able to.
Oh, you said, hey, I want to move to. Go ahead. I'm just like, folks are listening to. No, I know you live in this world. Like, you live in the world where folks say this probably. But you're talking to folks who, like, first of all, this brother's like in the middle of college, high school, talking about aspirations of being in Asia. And then now he's on Wall Street. Now, everybody, especially in those days, people were going to get the MBA, go to Wall Street. I mean, that was the thing. Now you're like, well, let me just add another layer of intricacy in this. I want to go to Hong Kong. All right, so I just want to, everybody listen, I just want to give y'all more, color commentary. That look, all right, brother, Nine is going to give you all the technical questions, but I'm trying to get the human story, brother. That's why I just want to let you know.
No, we got to make this interesting. I haven't talked about this in many other videos. I'll give you guys an exclusive so people come in and watch this.
Awesome.
So I'm summer internship. I wasn't able to convert my New York offer into Hong Kong offer at JP Morgan. And so, what I did, I guess I cold emailed every single top ranked investment banking internship program. and I got one interview with Deutsche Bank. And back then, it's changed now. The big banks were very focused on university students in the United States and Europe. You didn't have to be fluent in Chinese to come over and work in Asia. So they sent some investment professionals over to my campus to interview people. I interviewed, I got invited back for a super day of interviews in New York, and then I finally got an offer to come work in Hong Kong on the equity derivatives sales desk at the time in the summer of 2007. So the next summer, I fly back to Hong Kong, and this is pre 2008. If you follow markets, Hong Kong Hang Seng Index was at 30,000. Things were blowing up. China is ascending into the world, and Hong Kong is this window where Western capital and Chinese capital can sort of commingle, and it was amazing. A great summer. Had a really good time. Got the offer to come back in 2008 to work on the same desk. I obviously accepted that. And then, I start working in finance in 2008. And the first day I stepped on the trading desk was the Monday morning when Lehman had filed bankruptcy. And so I'm sitting there.
No. We're gonna make it a cliffhanger. We're gonna make it a cliffhanger. We were sitting there, but bro, now while you're taking this journey, a brother from Buffalo by way of Detroit with family from the automotive. I mean, come on, we get the northern migration black folks took to get better jobs. So I'm picking up what you're putting down without you saying. But now I'm just trying to figure out the cultural differences, the food, the language, all of these things. How was that? Like, again, I think the subject matter and this being an ambitious person can literally win the day with just the focus. But there's so many other things that are softer but still relevant. How did you deal with all those? Keeping up with your friends, your family. Like, how did you? Was it singleness of mind? Like, how did you go through that transition with those other parts? Because we still got the Lehman Brothers. We got the cliff. We all know this is about to get real wild. But tell me about these summers, these people you're meeting. What was that like?
It's a lot of fun. I'd say Asia is a big place. Obviously, 2-3 billion people, and vastly different cultures across that. And if you want the easiest integration city for an American, I would say that's probably Hong Kong, and less or so Singapore back in 2006. And so, of course, there's massive cultural differences. And once you get to know the place, you get a little bit more deeper into that. But it's like being in New York, but you're in China, is essentially what I would say Hong Kong is now. It's not like that when you really get there, but I think it's the easiest place to integrate as somebody who's not Chinese, who's not fluent in the language. And every major business, finance company who wants to deal in Asia and in North Asia particularly is there. And so you have this like international mix of people from all over the world. And it's a lot of fun because nobody is, except for like the Cantonese people, nobody's at home. And so you have a different sort of connection with people. And what may have seemed strange or somebody you never have hung out with in a very cliquey culture, wherever you're from, nobody has any friends, nobody has any family, and you get really, really close to the people that you meet. So some of my closest friends, we all intern together, roommates, work together on the trading floor, have started businesses together. And yeah, we're all this like cohort of people who arrived in Hong Kong from like 2007 to 2009. And so it's a very,
with
very
a common
community.
interest. Yeah, common interest. Even though varied backgrounds, but a common interest, international city. So it was already, I think when you just took that layer off, because I'm still thinking, man, all the way in Hong Kong, like it sounded, you made it seem like it wasn't far away, but bro, it's far away. So literally far away in Hong Kong. And then when you just started breaking down the layers, well, my roommates and folks I work with, it's an international city. New York's in it. Most people aren't from New York. They come from someplace else. They come work here. And then there comes that cohort of people that you're actually working with. I'm just breaking this down, and that was super helpful for those who may not be as as venturous as you. I think sometimes helping with these layers to break it down and say, hey, it's just like going to New York or a city that's international. You're going to work with the folks you work with, and they're going to end up probably being the folks you hang out with. Awesome. Lehman Brothers. Bum, 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 bum.
Yeah, so I joined the desk, and I don't know shit. I'm sitting there on the desk, and Lehman Brothers had failed the morning before, or not, that Sunday night. It's Asia morning, first market to open. Head of trading is running around the trading floor talking about which banks we could trade with and not trade with. So it was a super interesting experience of like crisis when banks were failing left, right, and center. Like by the end of the week, Morgan Stanley, Merrill Lynch had all taken either a bailout, Goldman Sachs, or got bailed out by some sort of commercial bank. And so, in the first week of being there, you see dramatic changes, and it sort of altered the trajectory of what finance was and is today. And I think it was not what we all thought it would be, a year prior, right? The money was different, the job was different, the feeling in and of itself of the industry was different as well. And so, I did my about 5 years, worked for Deutsche Bank for 3 years, worked for Citibank for 2 years. Nothing earth-shattering or exciting, but at the end of the day,
Hold on, John. I hear it coming. I hear the white paper coming. You see how he threw out them dates? 2008. The white paper's coming.
Yeah.
It's about to get good. All right. Take your time, brother. Take your time. I feel the white paper though. All right. Yes. All right. We set the scene.
yeah. So I got let go from my job at Citibank in early 2013, or say mid 2013, and I had read an article on Zero Hedge about Bitcoin. I thought it was interesting. And I had been a gold guy in like 2011, and sort of I get the thesis and the ideology, and I didn't have enough time to like really get into it. And so when I lost my job, I was like, I don't want to do this banking thing anymore. I'm not making the kind of money that I wanted to make, and I have no skills. Like, you really don't have skills as a trader apart from like high school math.
Hold on, Arthur, and I keep saying Art. I don't mean it. Do you say Arthur or Art? Which one should I say?
Doesn't matter.
All right, look, humbly, brother, you just said you lost your job. You're away from home. You've been working. We just seen the worst stock crash in 1929. Tell me, you just lost your job, bro. You got to make, bro, like so many people can relate to losing jobs. Like I've lost a few. That's why I had to work for myself. So my point is, you lost your job. What did you, like, I hear how you like transition, but how did that go? Like you showed up to the office, they were letting everyone, but how did that go down?
I mean, it was a cost cutting, what was it? Last one in, first one out, just standard, right? There's a certain number of thousands of jobs that I get clicked globally. I was the youngest guy on the desk. I got the boot. You got your 3-month severance and thank you, see you later. But at that point, late 20s, I'm like, yes, could I get another job in banking if I hustle a bit over the next 3 to 6 months? Of course. But I didn't really see a trajectory of something like I wanted to do, and I didn't really see that I was developing any real skills as a exchange traded fund market maker. I couldn't build the tech, right? I didn't have any clients. Of course I can assess risk and all the other things. I can do a bit of high school calculus and understand how to use, VLOOKUP on Excel. And that's literally all I know how to do. Yet I get paid. I didn't think the money was where I thought it was going to be, but objectively speaking, I get overpaid for what I contribute to human society. And so I thought, well, I need to change that. Let's try to learn something new and technology or whatever. And then this Bitcoin thing happened, and I started reading about it, and this is really interesting, and the whole economic theory, and I read a lot of economic history. I thought, well, this is my chance. This is, in my opinion, as big as the Gutenberg Bible, telephony in the early late 19th and early 20th century, and then obviously mainframe computing and the internet. And here we have this Bitcoin thing. This is something I want to be a part of. And again, it's a new industry starting from, not zero. There was obviously a lot of there by the time I got into it, but let me see what I can do. And that was derivatives. I know derivatives. And I thought, okay, I can try to build my own derivatives platform. And then I went out and found my co-founders because I can't code for shit. Ben Dilo and Sam Reed, and pitched them this idea. Let's build a cryptocurrency derivatives platform. And off we went in early 2014. And sort of, we did really well up into 2018, had some legal issues. It is what it is today. But that's really how I got involved in the Bitcoin ecosystem. And I guess I love the energy, the people, the fact that we're trying to build something new. And we're literally just creating the substrate for a new financial system where we use people's money rather than government money. And so that resonates with me on a philosophical level.
And you hear what he said? He did a little, it wasn't Jesse Jackson, but he said people's money and not the government's money. Okay, all right. We see you. We see how you did that in there. All right, awesome. So, John, I think now is where we got to do the tech stuff. I know folks listening and say, look, we're not going to hear Sinclair overtalk this brother. Brother Wanina, save this whole session with your questions. All right, now it's about to get. All right, I know you said you was born ready. If you can go to Hong Kong and all these places without a sweat on your brow, but Brother Wanina about to bring that funk. Go ahead, hit him, John.
Yeah, thank you, Sinclair. So Arthur, I think that was a great sort of lead up to the questions that we sort of got, and I have some colleagues in the office, Mr. Nicholas Maura, who is a big fan of your blog, and the last few weeks he's just been talking about Ethereum Merge, so I'm sure we'll get to it along the way. So my first question is, how does money and politics intersect, especially in the global environment we have, with all that's happening around the world? And you just called Bitcoin the people's money. So how is it playing sort of that political space as we're moving along into the 21st century?
So, I mean, I think if we take a look at, like, I think I've said this before in one of my essays, that as human beings, as an animal, or whatever you want to call us, we're not very strong or not very fast. We're not really dexterous. Our senses aren't really that good compared to other predators out there. Yet we've essentially decimated any other large apex predator on the planet. And that's literally only due to our ability to communicate with each other. We have spoken language, we can write, now we have this internet thing, and we can communicate with each other. And so politics and money, in my view, are the same thing. It's how do we organize the 7 billion or 8 billion of us around the world to accomplish some tasks. And that's why we have a computer, or we have roads, or we can fly in an airplane, and all these, and we have people who do very, very, very specialized things. The three of us, none of us sit on a farm all day and grow our own food, which is what most of us did up until 200 years ago, right? And so that's all down to organization, which is politics, and then money, which is just stored energy and allows us to time travel. We borrow money from tomorrow, we use it today to create something, and hopefully this stuff we created today generates more value than what we borrow from tomorrow. And so I think they're interrelated. And up until now, money is either created by the government because they have that power with military and legal codes, or it's been commodity, which is gold. But the problem with gold is it's really, really, really heavy when you get into a large value. So it's gold is the money, in my view, of the sovereign state that they use to trade amongst each other. But it's not entirely that useful for the people if we want to use something other than a government fiat currency. And so if we want to have a currency that's basically purely based on how much energy can we consume to mine it, proof of work, and then the people deciding that it's worth something, because everything is just, it's all in our minds. The US dollar is an imaginary concept, the same as Bitcoin, the same as gold. And so they're all just viruses that infect our mental construct, and they're powered by the communication methods that we have today. So, we have written technology, the printing press, and it started in the religious context. We have the telegraph in the late 19th century. We have long distance telephone. We had computers, and now we're taking the computer and internet concept and creating a monetary thing that's purely just what we decide it is. And it's the first time in history that happened. And that's why I think Bitcoin in particular is so powerful, and obviously all the other things that it spawned that have taken its image and done different things with it.
Interesting. So we're seeing Bitcoin as a technology having an impact in terms of in the global financial system, but we also have one component that sort of really being showcased at this time, which is war, and in particular the war in Ukraine. So how do you see affecting the global financial system? how does Bitcoin interplay in such a scenario, and what happens to fiat currencies like the US dollar, the Russian ruble, and the Chinese yuan?
So I think, we were in the process in the early stages of a disintermediation of different economic blocks, right? You have US and Western Europe over here, you have Russia and China over here, and then you have a bunch of other people who are kind of like, we don't want anything to do with this shit. And so then the question is, where do you buy your energy? Where do you buy your food from? The United States is special in that it has all the energy it needs and it has all the food it needs, and it's protected by two big oceans. So no one's going to attack it. So it can do whatever the fuck it wants. No one's really, and being self-sufficient. Its main ally, Europe, who essentially is a client state of the US that was recapitalized after they blew themselves up in World War II, doesn't have enough energy, obviously, and we're seeing that right now, but is the front lines in this ideological or physical war between the Eurasian landmass, which is Russia and China. And whether or not it's correct or not, from my studies, and maybe other people will disagree, there's a thinking in sort of, I would say, elite American political circles that you can never allow one country to dominate the Eurasian landmass, otherwise they become immensely powerful. And so the United States at all costs has to keep Russia, China, and probably Iran from being friends. And so Europe is sort of the buffer state in that, and that's why the U.S. pumps so much money into it. And so the Ukraine crisis is kind of just like a little skirmish where everyone is starting not to agree anymore. What does that mean for people who held dollars? Are they going to recycle those dollars back into U.S. treasuries anymore? How are the energy flows going to happen? If Russia's not selling its energy to Europe, but it's selling it to China and India or some other people, how is that going to affect things? It's hard to move energy. The pipelines are built from Russia to Europe, not the other way around. And so that's going to lead to dislocations in price. There's not going to be one unified market for oil. There's not going to be one unified market for grains and some of these other key exports from the Eastern European landmass. And so how are these countries going to trade with each other? If you don't want to use a US dollar system, what other system can you use? Can you use gold? Can you use your own currency? Can you use the Bitcoin blockchain technology? I don't know, but I think there's going to be a lot of instability, and it's not going to be this monolithic thing, which was, if you've got dollars, you're good, you can trade with everybody, no issues. Now we've got all these other competing concerns, which essentially drive up the price of everything, and you have structural inflation everywhere because it's not this seamless system that we had from 1946 to probably the late 90s, early 2000s. And so that's, I think, a situation, and it's remains to be determined whether or not Bitcoin is going to be that currency where it's going to allow the global population, who are not the elite political class, decide, fighting these wars, how are they going to trade with each other and communicate with each other? Is there going to be this other currency that's going to be on a lower level? Maybe it's not the sovereign central banks using Bitcoin or storing it or trading energy for Bitcoin. Maybe it's just the average person wants to protect their wealth against structural inflation or theft by some sort of person or entity based on these wartime scenarios. So I think it's just that instability, and so we can see if Bitcoin can rise to the occasion. It's undetermined.
Can I jump in, John? So
Sure.
you were over in China. So one of the things we saw early on, and we saw this is important, is how we talked about the decentralization of Bitcoin. We talked about, and this is, of course, we got these mining farms and whatnot, and some of this got changed, and then we would hear the threats of China closing up, and then was that really closing? They stayed open for a while, and then like recently they actually did close, and now you got folks in the States saying, yeah, this is going to be our time. Do you see that part of this equation about the decentralization? Is it real? Again, I'm a Bitcoin maximalist, so I'm problematic in the space. No, but the Black Blockchain Summit is not. It's open for everybody. Anybody want any type of thing that you want to do, just don't hurt nobody. But for this conversation about what's made it far, I think Bitcoin would have had the same problems as some of these others. I just don't think the alphabet boys got into it early enough. And by the time they got critical mass. You had the Chinese dealing with it. You had so many like different, interests involved in it. For it to go down, it would make everybody's thing go down. So it was kind of like, let's kind of keep this floating. But I guess what I'm trying to get to is, do you think, as we look at alternatives to the U.S. dollar and the U.S. hegemony, that's my words, not yours, do you see some of the things we've seen with proof of work and how now who has the biggest mining rigs controlling so much? Do you think that's a factor in how to deal with potential conflicts and alternatives to the current system?
Well, I think the fact that we've had this fear of Chinese miners not existing, then it happening, then the network being completely fine. The hash rate is now above where it was post the ban of mining from China. So I think that I think decentralization is like religion. There's nothing that's perfect, right? It's a spectrum. There will never be 100% perfect decentralization. There will be 100% perfect centralization on the other side of the scale. And so as human beings, we live in an imperfect world and we strive for perfection that we'll never achieve. And so I think that's the journey. And so Bitcoin in and of itself has proven, okay, we had this fear. China controls Bitcoin. China, for its own reasons, said, we don't want you guys consuming all this power onshore. Get the fuck out. They left. And then the hash rate went other places. And Bitcoin still exists. Blocks were still mined. Transactions still happen.
All right, let's keep it going, baby. All right, and then he just brought that up about when China said get out. John, that's a good time to talk about these digital currencies. I mean, these centralized, bank currencies, because China, I think, has theirs. And I know you've talked a lot about that. What do you think about folks making fiat digital? How is that?
I think I put this out there in a particular essay. I think that now that we have, on the one hand, I think this is a very bad thing for the person, but if I am a government official, I have this devil's pact with the banking system. I need the banking system, but they also fuck up from time to time and cause me issues like the global financial crisis and yada, yada, yada. And the general population has a strong aversion to bankers, but I protect them because I need them to operate the monetary system. With, distributed ledger technology, I actually don't need commercial banks anymore. I being the central bank, can give all my citizens an app and say, hey, why don't you bank with me directly? It's 100% secure because I'm the government. I can print money willy-nilly, whatever. You can send your money back and forth for free because I'm not a profit-making entity. I don't need to make money on you sending transactions like your bank down the street does, right? Because I have other goals in mind. I care about power and control rather than profit. But if I'm the government and now I've basically disintermediated all the banks and put them out of business, I don't need to continually bail them out because they keep fucking up all the time by extending credit when they don't need to, getting involved in all sorts of dodgy accounting stuff. I could nationalize the transmission network of money and do it faster, cheaper, and better than the banking system. Now, obviously, the banks who control the central banks, because usually the private institutions, apart from the Federal Reserve is a private institution. Member banks are the shareholders. Why would they allow the Fed to essentially take them out of business? Because if they can no longer count on our deposits in their hands to make loans, what are they really doing? They actually have to do their job. They need to go and actually assess real businesses and make a credit determination and be able to assess credit rather than having a government charter and then gambling and then asking for inflation to pay for their losses. And so I think the CDBC or central bank digital currency movement, if I'm a government official, makes a lot of sense. This is what I should be doing. As a private citizen, it's really bad because now I have no more financial privacy. I get that. And then I think what's stopping it in a lot of probably more, Western liberal democratic systems is the fact that the central bank is actually owned by the member banks, who they'd be putting out of business by properly implementing a CDBC. So unless there's some sort of very exigent wartime need to, corral all of the paper money and put it in this digital form of CDBC, I don't see how politically the government is going to be able to essentially put all of its commercial banks out of business by putting this in place, even though the solution for them is better than paper money rolling around or us having a bank account at a too big to fail bank. Obviously, it's different in China or another country that has a different political structure and different, constituents they need to appeal to. But that's sort of where I come down on this whole, central bank digital currency issue.
It sounds like, John, when you were teaching me, real quick, teaching me in Kenya. So, they had M-Pesa, and John, he was early on in BitPesa. But in the United States, when I was in Africa, a lot of times folks would say, well, the United States is so advanced, that's why they don't have mobile money. And the truth, we said, nah, it's because our politicians are controlled by banks, and they don't want the telcos to have the cash reserves. They want to hold all the cash reserves. They don't want the telcos, like literally pulling out a plastic card with a cassette strip on the back is ridiculous. Like, it's just dumb. But literally somebody's invested in these legacy ATMs and a whole bunch of stuff that they're not willing to let up on. And I live in DC. Like, it's state capture. Like, the people who are making the policies aren't the folks we vote for. They picked them already. They never lose. The banks, I don't care which side of them, they never lose. They butter the bread on both sides. So the telcos, AT&T and Verizon, are not going to be holding cash reserves like a Vodacom or somebody else in Kenya. And I think in the point you just made is that even a more efficient, effective system puts out a business the folks that literally control the political and finance system, not for the betterment of the world, but for the betterment of themselves, for however long we choose not to resist. And then when the people rise up, well, I'll stop again. Brother John.
Yeah, that was a good point, Sinclair, because in Kenya, we've been using M-Pesa, which is mobile money, sort of credits on our mobile phone for almost 20 years. So, and that sort of leapfrogged the banks. The banks are forced to work with the telcos, not the other way around. And the benefits for the end consumer because they have the money on the phone. So I think in recent times, I know in the US and to a lesser extent in Africa, we've seen stable coins coming into form. And a lot of people are beginning to pick up on stable coins. So is that the approach the US is going to take in terms of a CBDC, where they let the corporate interests sort of run with these stable coins rather than creating a Fed coin? What approach do you see happening, there in the West?
Obviously they tolerate it because Circle, USDT, Paxos, they have, I don't know, what I call $100 billion of dollars in the banking system. I don't see what I don't understand is if I'm a large commercial bank, these stable coins are essentially using my pipes that are very expensive because I have to comply with all these reams of banking regulations. Yet, they're allowing people to move money around the world, in 10 seconds, and I don't get a cut of that. So I don't understand why the banks haven't just said no more bank accounts for Circle, Tether and such and such. Because if I was a CEO of a bank, I would never let them deposit money in my bank because they're trying to put me out of business. But they're there. And so I think at a certain level, because these entities essentially hold short-term treasuries, and the Fed and the Treasury have voiced this concern. What happens if the combined U.S. dollar stablecoin system? Let's say it's $1 trillion of U.S. public market debt, right? That's probably what China's 2-something trillion, Japan's 1 trillion. That would be what top 3 largest holder of treasuries globally. And for whatever reason, let's say that a bunch of holders of these currencies said, "I need my cash today. Please wire the money back to me." And so what happens? The stablecoin issuers, they go and they say, "Okay, I need to go sell all this debt now." Not like, don't tell me, give it to me in a week, hit the fucking bid. This is supposedly the most liquid market in the world. Give me my dollars back. And that's an issue because if you've read some literature about the microstructure of the U.S. Treasury market since Dodd-Frank and some of these other banking regulations, you'll know that the liquidity has gone down because the banks can't make money holding these large inventories of treasuries. And so this could be bad for the stability of the market if these stablecoin issuers get so large. They obviously hold treasuries to earn a yield, and then they have to handle the redemptions from their holders, and that's the risk that the Fed and the Treasury have highlighted with these stable coins. And so I think that while they probably won't outright ban any of this stuff, they'll put significant pressure on any bank that lets these things get too large. Now, what's too large? I don't know. But I would say if they're starting to creep up to top 10 holders of treasuries globally of any U.S. institution, like they're another sovereign country, that becomes a market issue because for whatever reason, a bunch of people could want to have their dollars today, and the treasury market can't handle the selling of all those securities at the same time. So I think there's an implicit cap on how large a dollar-based stablecoin can get. And so if there's been some people talking about how the correlation of the amount of dollars in the system to the value of all the other cryptocurrencies in the ecosystem, I think there's an implicit cap on how large they get. There's obviously other ways of doing it, like MakerDAO and some other of these dollar-backed stable coins, but that's a risk that I see to people who think that this is let's extrapolate to infinity in terms of how large this can get. There is a direct market impact that the asset that they hold, which we think is liquid, is actually not that liquid when you're talking about hundreds of billions of dollars of it.
Yeah, and how about the fact, I think early on we thought, in the Bitcoin space at least, that we were actually like pirates and we were about to come up with this new system and down with the banks. But looking at some of the legislation lately as a small startup, the amount of regulatory compliance you have to do now in these spaces, even when we talk about stable coins, do you see, and again, this might be, again, I'm an alarmist and an extremist wrapped in two pieces, that these banks will ultimately take this all over. Like they'll let Circle play in a sandbox. Like we always talk about sandboxes so we can kind of like develop our startups. Maybe they're letting Circle get the kinks out. And once they get to a point, the banks just literally take them over. And so when we're talking about stable coin, like even talking stable coins where you're talking about the physical world and the digital world, like some of these NFT, anytime I see people talking about how well the distributed ledger works digitally, is great, but you still need an oracle. If we start saying, like if people were bringing up Venezuela when they were talking about the petrol, they were going to have their oil connected to crypto, but they might count the same barrel 5 times. You got to trust somebody then. So then it starts to get weird. Do you see maybe the literal banks themselves might take over some of this system?
I mean, it's a competitive. It's a competitive market. So maybe at some point there will be a bank who says, you know what, fuck it. I'm going to, I was making $100 billion a year in revenue on, global transaction banking. I'm okay to make 20. I'm going to go out there and launch my own thing and try to take over this market. And because I am, insured essentially by the Fed or maybe the ECB or one of these large central banks, I could do it more credibly than Tether or Circle or any other of these private companies who, at the end of the day, still need to bank with me anyways. And so, the profit motive, I think, will drive somebody who's not in the top league table of bulge bracket banks to try it out, and we'll see how it goes.
Yes, sir. I know, good point.
Yeah, I think one of the interesting things I've seen with stable coins in Kenya, particularly Tether, is it's beginning to sort of become a hedge against the devaluation of the Kenyan currency, the Kenyan shilling, because of inflation. So is that something that would make the US government or the Fed in particular want to let stablecoins thrive, given the competition they're getting from China?
I mean, I guess at the end of the day, the dollar is the reserve currency, and unless you grow your own food and have your own energy, you're going to need dollars to trade. So whether that's stable coins or the U.S. banking system or whatever, you're using them, and then the Fed controls the levers that they believe they control in terms of liquidity conditions. And so I don't really think I don't know, but I wouldn't think that they're thinking about it in that granular of a level. I think the concern that they have is, what do these stablecoin issuers actually hold? They hold treasuries. If they have to sell all at the same time, that impacts the market that I really care about, which is the functioning of this U.S. Treasury market. And then what sort of policies am I going to implement to make sure that that thing doesn't happen. And this is all stuff that they've said before of what they're actually concerned about.
All right. Okay. So down to sort of one of the recent articles you've written on the Ethereum merge. I think the merge is about 6 days away. Do you have any updates or sort of what can you tell people in terms of giving them alpha on what to expect from what you can
No,
see?
no. You can't do it like that, John. No, he got to do a prediction. No, we're not letting you
Yeah.
off. 'Cause by the time this thing airs, it would have happened. So we're going to have receipts. We're going to have all your receipts. Or if you're the guy we say you are, where's Negro Diamonds? We're going to look into the future.
Of gas spent versus issuance, how is that going to interplay? And that's where I think we'll see either outperformance or underperformance of ETH. I don't think that there's there's no buyers who haven't bought already. There's no sellers who haven't sold already. And so I think the market is purely based on what are these flows going to be? Because we've been talking about it for a year, whatever it is.
No, we've been talking about them going for proof of work mistake literally for years. Now I'm tired of
Exactly.
acting like this is normal. Like these guys, come on, and then to come up with Solidity, who comes up like in a new industry with a new programming language that got his own bugs? It don't make.
Yeah, and so again, at the end of the day, there's a lot of people who've been around a long time and they've heard a lot of stories, and we're just like, okay, prove to me that this is going to work. And so they got to prove it. And so we'll see, weeks and months after this happens. But thankfully, to the nature of blockchains, will all be transparent. So we'll see how many ETH are minted, how much are people spending in gas, what's the mismatch there? Is this 90% drop in issue